I mean, I think it feels very, very much like that week in coronavirus, where it was absolutely out of control on its way down. Powell steps in, says money printing, and everybody goes, forget that, that never happened. And 3 days later, here we are, stability in markets, everybody feels okay. But like you say, I'm really, really concerned that we haven't seen the unwind of the carry trade. We've only seen the beginning of it. And certainly what my friends in Japan say is stuff that's happening in the regional banks there is going to make what happened in the regional banks in the US look like a cakewalk. You know, wow. So I think plenty more to come, and I think we got a good warning signal about how bad this could be, but I don't think it's started yet.
There is, if you don't buy the first sell-off. That is something we've watched over the years after fairly significant events, from the financial crisis to even a tech correction and then to the COVID pandemic era. You've mentioned what could be underlying the system in Japan. Flesh that out for us a little bit more, because we've seen how there have been consequences from cheap money across regional banks in the States.
Yeah, I think the whole question is just exactly what is the extent to which a whole series of regional banks in Japan have borrowed on the basis that they've got infinitely free money to be able to go and do that, and where's that money ended up? And clearly what we saw this week is it hasn't ended up in regional banking systems lending to the Japanese economy. It's really propped up a huge amount of speculative capital all around the world. Just exactly where it finishes, I'm not sophisticated or smart enough to know. All I know is we got a warning. The idea that you could be down 10% in a day for really what was not much more than a sort of medium-sized wind.
Do you worry then that central bank action perhaps then isn't doing enough to kind of play its role in perhaps helping the situation here?
Well, I saw the most interesting thing I saw on Twitter this week was a guy saying, look, the Japanese have got to respond to Japanese circumstances. That means they're going to have to put interest rates up because they really have done what they wanted to but never really thought they'd ever be able to do, which is create the conditions of inflation in Japan. Now you've got a situation with the yen carry trade in the US, where if you start taking rates down in the US, you're actually going to bring about the reverse of what you want to happen, because that'll be an offsetting way to have the carry trade unwind. So yeah. I think Powell's in a complicated set of situations here where he's got to take interest rates down for the domestic economy, but could easily trigger something nasty for markets.
On the other side, the PBOC will they be waiting for the Fed to cut before they begin a cut themselves,
mate,
if even possible?
I've been so wrong so many times with them. I'm not pretending to know what they're doing at the moment. Talk about long and wrong. I love China. I love what they're doing over there, but I absolutely can't figure it out at the moment. And I look like a fool.
What do you like about China then? Is it just the structural sort of movements that they're doing now?
Cheap. It's just make your teeth hurt cheap, the equities at the moment. It's an efficient economy. It works really, really well. Yes, they've been hostile to speculative capital and they've been hostile to inequality. But overall, I think the policy settings for the Chinese are really, really intelligent. And it's in the price now. I mean, to be able to buy a whole series of those things at 6 or 7% dividend yield, like Hong Kong Land and stuff like that, Alibaba at close to book, for any sort of catfish value investor like me, it looks really, really good, but I'm wrong about it.
Is there a distinction between property, which we seem to be going through a very long unwind cycle in China, versus technology?
Well, the problem is both are down a lot at the moment and both make me look like a fool. So I don't want to be talking, but absolutely there's going to be a different one. When they come out and how they come out, I don't think they're going to come out correlated.
Speaking of speculative trades, let's talk about crypto, because finally a big test of these recently created ETFs for crypto. We've seen that, I think if we all talk to a lot of retail investors, there's been a lot of speculative trading by people in this space. What do you make of where we go to from here? Because it's certainly proved that it is not a safe area of the market to hide out of in a market sell-off.
No, absolutely true. I mean, as so many people said, it's 2x the NASDAQ at the moment in terms of volatility. And as well as that, I think you've got this whole situation, far more importantly at the moment, about a huge spread trade on Republicans versus Democrats getting in now, where the Republicans are saying they're going to make it part of the reserves of the US Fed which is obviously legitimizes it, completely takes it into a sort of limit up situation, whereas the regulatory jihad that the Democrats have pursued takes it into some other direction. Now, my view is actually Trump and the Republicans saying that they will legitimize it means that a whole series of the other reserve banks around the world say, look, maybe Harris wins this time and maybe it's 4 years' time, but ultimately it's a legitimate asset to own. So I think it's not for widows and orphans. It's clearly got a ton of speculation in it still, but I think what Trump did has legitimized it. And I've always hated Bitcoin, but these days I'm like, no, I think I'm wrong on that. I think it has been legitimized.
It's such an interesting trade, though, that Bitcoin story, because one wonders, what is it that it trades on? Mm-hmm. Is it adoption, right? Or is it just the speculative nature of it right now? Because the hedge on inflation aspect is one that, in some ways, some would say hasn't really worked thus far.
Come on.
You think it
What
has?
are you talking about? Any rational, disciplined, dollar cost averaging strategy, as opposed to, oh, I'm going to punt when it's hot. You've absolutely crushed it. It's just that every time it's hot, you go, now's the time for the Bitcoin.
Yeah.
You're down 40, you go, oh, it's finished and it's gone.
So
if you say
skin then on that.
You've got to be tough and you've got a dollar cost average and you've got to recognise that it should be no more than low single digit percentage of people's economy. But it requires discipline. But put it back on any sort of simulation over the last 5 years and some disciplined strategy, it's worked incredibly well.
So you think it goes up from here, 60,000 right now? I mean, it's hard to tell.
I think it's a legitimate asset class now. I think we're back to 61. Everybody was, cowering in the corner, probably asking for more lavatory paper on Monday. Yeah. But we're back to another place. So, I do think it's okay.
Just the crypto space, to be fair.
No, it wasn't.
Let me ask you more broadly around what we're seeing in terms of funding costs, because there is a view that the Fed might be behind the curve now, that perhaps there are recession signals out there. What's your view on that? Because there is another alternative view, which is that funding costs have been so low for so long, allowing zombie companies to grow and proliferate. And there hasn't been a proper recession to wash out the system. So therefore, we're keeping many companies, and that's banks as well, alive that should not be alive at this stage. What do you make of where we stand?
So you're a supporter of this argument. Give us a good recession, it'll return wealth to its rightful owner.
The devil's advocate, because that voice is not out there.
No, I think that's absolutely true. I mean, we're having a giant modern monetary theory experiment going on at the moment. 6% structural deficit in an economy that's growing like the US. I mean, it's absolutely crazy. So at some stage, does it have to come to an end? For sure. Do I believe, like you said, the Fed's behind the curve? Because I think we're already pretty close to a recession in the US. It just hasn't shown up in the forward numbers. So I think the Fed's going to cut. But I also agree with you that this amount of speculative capital, this amount of stuff in private credit, private equity and venture that is marked to fantasy, not to actually anything where somebody's going to buy the business, creates a huge amount of problem. And the longer we kick it down the road, the worse it's going to be.
So you're saying it's possible to have a recession because of the asset price deflation story that's not been addressed for many, many years?
Yeah, you think about, we've had this detachment between the speculative economy and the real economy. And I think the real economy needs help. It's beginning to recover. We're making a whole lot of structural changes in terms of reshoring and friendshoring. And then what is there? How many $1 trillion of mismarked assets are sitting on the investment groups around the world? I mean, huge numbers of stuff where people can't get out, but they don't want to mark it to the price they'd have to cut it to
Ultimately,
go.
then, to sort of move the needle, though, you would need, or one would think, maybe consecutive cuts then, in order to move the needle from those recessionary fears that perhaps are in play right now. Is that your anticipation then, that you'd move in September, move in November, which is a day after the election, which would be a very difficult one to really put in, then move again in December?
Well, September's worse on the optics.
Yeah. I mean, by the end, do you think 100 basis points and then you're going to do 50 to start or 25? I don't know. I mean, that level of granularity, I'm just not clear. And your point about the day after the election. You know, politics are clearly going to have a role here. Yellen's doing a whole lot of stuff against the, Fed.
Yeah.
Just exactly how it plays out, I'm not good enough on this.
Just a quick one. Best opportunity you see at this stage?
Not at the
Bitcoin.
moment.
Don't say Bitcoin.
No, I'm not going to say Bitcoin. I'm really right at the moment, not sure. I mean, I'd like to say China on a 3-year view. Truthfully, Hong Kong land, a couple of those things, I think they look good to me.